as a newer struggling trader, I know it can be so overwhelming trying to decide which currency pairs should you trade. So in today's video, we're going to answer exactly that question. And not only that, we're actually going to talk about which currency pairs we should be trading today in 2019 and going forward into 2020. So if you're ready to get into the video, if you're ready to use hard numbers, hard statistics from a reputable source to provide us with this information, then all I need you to do is hit the red subscribe button below me, join the trading team, join the family so you don't miss any of our future videos, and let's get into the information. What's up, traders? Welcome back to the channel. For those of you who are new, my name is Austin Silver. I appreciate you being here. I appreciate you checking out my videos. Do me a favor before we dive into the data here, hit the red subscribe button below me, join the family, join the trading team. That way you don't miss any of my future videos. So today, we are going to break down the 23-page PDF put out by the Bank for International Settlements from their central bank survey. This document is lengthy, and it's written in a way that isn't the most entertaining. But my goal here with you guys is to use the data in this report, the stuff that I've already read through, so you don't have to basically, to show you which currency pairs are being traded the most, and therefore which currency pairs we should be focused on the most now, today, and going forward into 2020 and even 2021. Before we get into the data that this report includes, and this is available online for free, I can even link this below, and if you can't find it, just reach out, I'll make sure you get it. I mean, if you just Google them, I'm sure you'll find it. Before we get into it though, I want to tell you what this survey actually is. It says the BIS Triannual Central Bank Survey is the most comprehensive source of information on the size and structure of the global foreign exchange and over-the-counter market. Now, it says here that they're derivatives markets. And for those of you who have taken my course, we actually spend a lot of time talking about that because it's important to understand that we are trading a derivative market, which means that you're trading on the value of the asset without actually owning the underlying asset. It's a very important note that most people, again, just aren't talking about on YouTube for some reason. And I'm not a rocket scientist, guys. This stuff is all out there for free. It's just literally 99% of people are too lazy to go read this stuff. Here you say, it says, if we keep reading, FX market activity has been surveyed every 3 years since 1986, and the OTC interest rate derivative market has been surveyed since 1995. That was the year I was born. So this thing has been around for a long time. It's very well respected, and you can see it says it was supported through the Data Gaps Initiative endorsed by the G20. So this survey and this company that's putting out the survey has the endorsement of the G20, which you would expect to be legitimate. It says this statistical release concerns the FX turnover part of the 2019 Triannual Survey, which took place in April and involved central banks and other authorities in 53 jurisdictions around the world. They collected data from close to 1,300 banks and other dealers in their jurisdictions and reported national aggregates back to the BIS, which then calculated them for the global aggregate. So that's who is conducting the survey. You're not just talking about the United States, we're not just talking about China, we're talking about survey of the entire world and the central banks all over the world. The highlights from the survey are listed here, and they are pretty good, but I think that when we get into the detail of the charts later, you're going to understand why I wanted to break down the whole thing. The highlights are always good, but you know you really need to read the full story if you're going to get all the details. You're not just going to be able to read the cliff notes, but they're important. So first, and this is like one of those things I was talking about when we have to break our old beliefs, every internet guru, every Instagram guy is like, Forex is the best market in the day, $5.3 trillion a day, whatever they say. I can't even speak because they all make up different numbers. No one actually knows what they're saying. If you read this report, if you're actually understanding what goes into trading and who the BIS is and why this survey is important, this report says that now in 2019, we're not a $5 trillion market a day anymore. We're at $6.6 trillion per day. So whenever you see somebody on the internet now talking about it's a $5 trillion a day, school them. Send them to the survey and tell them how you found it. The second highlight says that the US dollar retained its dominant currency status, being on one side of 88% of all trades. That's a huge majority. Another very important highlight, I just want to touch on this before we scroll through. It says, while volume of spot trades increased relative to 2016, the expansion was way less strong compared to other instruments. Now, what that means, for those of you that don't know, we are trading in the spot Forex market. Big companies, big institutions, big banks, they are trading in the swap market. So it's swap and spot. You can just think spot market, I want to trade on the spot, that's what the retail guys do. The swap market, like I said, is for the bigger players. What this is saying is that the overall volume of spot traders, you and me, has increased, but its expansion was not as big as it was compared to FX swaps and options. We had a huge gain there since 2016. And you're going to notice the year 2016 referenced a lot here, and that's because, like I told you, this survey only comes out every 3 years. I started trading in 2015. So when I got into my first year and a half, I didn't know this survey even existed. I would have been reading this and trying to take in all this information then, but I didn't know, because when you're new, you don't even know what you don't know. But now, being aware of this, I've been waiting for this survey because I knew market volume had increased. I knew market participants on our side of the things have increased. So this report just reaffirms it. And we're going to use all this information to answer the question in the title of this video, that what are the best pairs to trade? We're going to get there. Another important highlight, just so you understand, because you're going to be in the retail Forex market, is that it says FX trading with other financial institutions, i.e. those other than reporting dealers, exceeded inter-dealer trading volumes. This was 55% of global turnover. Now it says this was due to a higher share of trading with non-reporting banks as well as hedge funds and proprietary trading firms, while trading with institutional investors went down. So it's saying that of all the global market share, you had these institutional hedge fund guys decreasing their market share, and more people like you and me, more hedge funds, more proprietary funds, more people like us getting into the market. Another important piece of this, and we're going to break this down in a couple minutes, just note sales desks in 5 countries, the UK, the United States, Hong Kong, Singapore, and Japan, facilitated 79% of all the foreign exchange trading. Trading activity in the United Kingdom and Hong Kong grew by more than the global average, and mainland China was one of the biggest growers, jumping from 13th in the list to 8th. So we're going to break down those numbers in detail, but I just want you to notice China making a big move as far as its retail traders getting involved. You could blame that on brokers being more accessible, the internet getting more accessible to them, right? Some of those factors definitely playing into the rise in Chinese traders. Now, we're going to scroll through here and just take a look on a net basis of the daily average in turnover for each currency pair. You can see we have red is 2019, blue is 2016. You can see the dollar is always at the top, and GBP is also super important. And even if you go over to the right side here and you look at which currency pairs, Euro USD is the biggest, most often traded. USD JPY in 2016 was 17%, down to 13% now 3 years later. All the emerging markets were bundled into this one right here. But if you look down, we have USD, AUD USD, USD CAD, all of the pairs that you and I know are tradable assets. So looking at this, just in 2019, we know Euro USD is going to be traded a lot, which means it's going to have a lot of volume and it's going to be able to move for you because a lot of people are trading it. USD JPY, on the other hand, decreased fairly significantly, and that's important to note. That means less traders are active on that pair. But still, the dollar, the euro, the yen, the pound, and the Australian dollar are our main go-tos as far as which currency pairs are being traded. And it's important to know that when we're talking about the best pairs to trade, because you want to trade pairs that are being traded. We put out a video, I think it's a couple days ago, I'll make sure I link it here, talking about what we need. And it's 2 pieces, it's volume and volatility. If you're trading a pair like the peso that is not being traded a lot, it's going to be more erratic. Spreads are going to be harder to find, good spreads are going to be harder to find, and the movements are going to be more erratic because it's illiquid. It's not being traded by people as often, so the price will jump and gap more often than it would on Euro USD. As we scroll through, we're going to talk about turnover by instrument and maturity. This is talking more about the swap versus the spot market. So turnover, which is how much money is being pushed around every day, in the spot market rose in the 2019 survey, but declined as a share of global activity. At 2 trillion, so the number of dollars being circulated is larger, but as a picture of the whole Forex pot, the percentage of it is actually smaller. So while we're growing, What's really growing is those institutional guys that are trading the swaps. Because if you read the second paragraph, turnover in swaps, the most heavily traded instrument, which is being used by market participants for management of funding liquidity and hedging currency risk, this rose by more than a third to $3.2 trillion per day. And that's almost half of global trading every single day. So while the whole market is 6.6 trillion, between us on retail side, that's only about $2 trillion a day. Still larger than the stock market, but not the full 6.6. The majority of the 6.6 trillion comes from the swap market, not the spot market. And we are in the spot market. Write that down. I know it can be confusing. So this chart illustrates that for you. You can see from 2016 to 2019, the overall size of the market grew from about 5 trillion to over 6 trillion. We know that. But if you look at these two graphs, you would see the spot market decreased from 33% to 30%. But the reason why this 30% is still greater and shows us growth than this 33% is because the dollar number, the amount of money being circulated, is greater here with 30% than it was at 33% because the total is bigger. The total pie is bigger here than it was here. So keep that in mind. The percentage of market share decreased slightly, but the overall size of the people in the spot market, the amount of volume in the spot market, is back up to almost 2013 levels. You can see from 2001 forward, they've been doing this survey. Look at how the market is just exploded in size. And the spot market and the swap market, spot and swap, both are the two contributing factors to that. So we're going to skip this part and talk about the geographical turnover by country. In 2019, like I said, 5 sales desks controlled 80% of the trading. The share of trading taking place in the United States, it says, declined to 17% from 20%. So just a 3% drop. Just less trading going on here on the retail side, on the bank side, on the institutional side, the government side, the whole thing. 3% less over the course of 3 years. Not a big change. In contrast, in the UK, they're up by 6%, going to 43% of global activity in 2019. So UK traders are on the rise, United States traders maybe on the decline slightly. The interesting thing here, mainland China is up to $136 billion in 2019, or an 87% increase in their active traders since 2016. That is extremely substantial to me and stands out to me because the US only declined by 3%, the UK is up by 6%, China's up by 87%. That is substantial growth, and I think that needs to be something we keep an eye on year on year on year. Are more brokers coming out of China? Are more traders just, showing up from China? We need to watch that and start to see how that affects the retail side of the market. The last point here, talking about geography, it says the share of FX trading in the leading Asian financial centers, which is Hong Kong and Singapore and Tokyo, declined slightly, just to about 20%. So again, not a huge change over 3 years there. The main change, the biggest change as far as where are traders actually sitting when they hit the button, China. Most of it changed in China. US decreased a little bit, UK increased a little bit, China was where it's at. This chart here, on a net basis, shows just the difference on a daily basis between the spot transactions and the foreign exchange swaps. You can see the swaps are up to 3,200, while the spot transactions are just at about 2,000. Now, the outright forwards, the currency swaps, and the options don't even come close to these two. The majority of the market is moved between the spot and the swaps. Us in the spot, the big banks, the big guys in the swaps. That's how you can keep it in mind. And now that you understand where the market is moving things, how the market is moving things, what the players really are, here we're going to break down the size of market share that each currency controls. The first one, I've said it already, is the dollar. The second one is the euro, and you can see how it's changed each year. This year, the euro is making up about 32.3% of all daily turnover. The pound and the yen, both right behind that, the yen at 16.8, the pound at 12.8, and then underneath that, the Australian dollar at 6.8, CAD at 5%, and the Swiss franc at 5%. Now, the reason that these numbers add up to more than 100, if you go down this list, they have to add up to 200 because each currency pair is 2 pairs. It's never just one. So when you look at this, if you're someone who loves trading these pairs that are down here on the list, keep in mind that the broker is going to have a hard time getting liquidity on pairs that are not being traded. You need to focus on the pairs at the top of this list here: the dollar, the yen, the euro, the pound, the Australian dollar, even the New Zealand dollar is way down here, under the yuan and under the Hong Kong dollar. So it's interesting to see NZD down the list. So as you're moving forward, keep in mind dollar, euro, yen, pound, Australian dollar. That's where the money is. And more to the point, you have more money in the pound every day, in the yen every day than you do in the Australian dollar, Canadian dollar, and Swiss franc combined. So just keep that in mind when you talk about, I want to be in a liquid pair, I want to be in something that moves. If we keep going, we can actually break this down by currency pair. Now they wrote it as USD euro, but for us as traders, it's labeled Euro USD. It's the inverse. It's the same thing. You can see Euro USD is making up 24% of daily turnover. That's substantial. A quarter of the market in the spot market every day is happening on Euro USD. Take that a step deeper. The next one down is USD JPY, then GBP USD, then AUD USD, and USD CAD. The pairs that we all know are tradable, but you need to see the difference. It is substantial. We're talking USD CAD, which everybody loves to trade, only at 4.4% of daily turnover. Compare that to the euro dollar, we're talking about 24% of daily turnover. That's why CAD gets choppy. Euro USD doesn't as much. You have to keep that in mind because that's where the money is. Remember I said at the beginning of this video, we're following the money? Even here, look at Euro GBP, 2% of daily turnover. Euro JPY, 1.7%. AUD JPY, 0.5%. And then other currency pairs I think was important to label here at 1.6%, a lot bigger than a lot of these other ones you see here. What's in that other currency pairs? Well, that would be pairs like the pound, pairs like the New Zealand dollar, GBP NZD, one of my favorite pairs. That's included in this 1.6% at the bottom. So now you can kind of see the pairs where the money is being moved, which pairs are trading the most, and that helps us decide which pairs are best to trade. I want to round up the survey here with the countries that are actually trading the most. The number one we already talked about is the UK, 43%. The United States is right behind them, second at 16.5%. It's these other numbers that I'm interested by. It's the Hong Kong at 7.6, it's Japan at 4.5, it's Singapore at 7.6, Switzerland at 3.3. Those emerging ones are interesting to me because I'm going to keep an eye on these every 3 years with this survey. Look, France at 2%, Germany at 1.5%, China coming up 1.6%. Go back 6 years, this was half of what China was doing. Half of it, more than that, right? And even Australia, 1.4%. So these are, and Canada, look, 1.3% as well. So these are the countries that we know traders are active in. So when we talk about which currency pairs should we be trading, you now know which pairs have the most volume, which currencies themselves have the most volume, and now I'm showing you the countries that are trading the most. So knowing those 3 points, knowing the countries, knowing the pairs, and knowing the actual currencies, how much volume they're doing on their own separate from the pairs, that builds us enough information. It gives us enough information to know which pairs we should be trading. And for me, I translate all of this information from the report into one simple statement. I think that if you focus on solid, healthy economies, healthy to the point that I mean we're developed economies, not speculating on Trump and the China trade war, not speculating on the Mexico and Canada and United States agreement, not worrying about that. Just looking at countries that have strong economies, healthy economies, that employ people, that provide some, social benefits and all of these things. These countries are the countries that have turnover every single day, and therefore their currencies are being exchanged every single day, and therefore those are the currency pairs that we should be trading in 2019 and going into 2020. I strongly believe that from this information, we're going to see more growth in China. You're going to see more traders coming out of China, more information coming out of China, which is never going to be a bad thing. We want to take all that information in and have it help us make better trading decisions going forward. I even think you're going to see brokers starting to list more currencies and getting better liquidity behind some of these emerging market currencies because more and more people are getting involved in the market. I think the biggest thing you could take away if you've watched this far in the video, not only which pairs you should be trading, the euro, the dollar, the pound, the Canadian dollar, the Australian, all those ones that have volume, but you should also take away the fact that the market itself is growing. And that's important. You should feel confident in the fact that you're growing in a business that is not stagnant. It's not decreasing, it's growing. And that's a big piece for me, and I think that that's a big piece for everyone who's active in the market. So I hope that the survey here today provides you guys with some good information. I know that the whole thing itself can be overwhelming and make you not want to read it, and that's why I wanted to do this abbreviated video here for you guys to get the solid information out of it and talk about it. And I want to open a dialogue with you guys about the statistics from this central bank survey. So if you have any questions, any comments, or if you agree or disagree, drop a comment down below. I'd love to talk to you about which pairs you're trading, why you're doing that, or did this video help you? Did it tell you which pairs you should be focused on and which pairs you shouldn't be focused on? Just let me know in the comments, guys. I'm always down to chat. I'm always down to help you guys in any way that I can. As always, I appreciate the time. Do me a favor, make sure you're subscribed, and I will see you guys in the next trading video. Do me a favor, like I said already, hit the red subscribe button below me, join the family. That way you don't miss any of the future trading videos that we are putting out for you. We're putting out?